Hello guys, here's something I haven't talked about for ages, but it might be worth looking at. It doesn't matter what currency pair you're on. And just, let's get rid of that. All we're doing is looking for an area of a new high. So, or the highest high, or a lowest low. So, in an uptrend, all you're looking for is the highest high, and it is always worthwhile looking at the line chart for that. So that's the highest high, so that means that is the most recent level of support there. So let's put a horizontal line on that. So that is the level of support we need to trend through in order to continue down. So put the candles back on there, and you can see then what happens when price trends through it. So high, low, we haven't trended through it, lower high, lower low, and price just collapses. Now this one didn't work as well as I'd hoped, because I would have expected to have some sort of accumulation there, but that could easily have been used. This is the American Open, so I wouldn't be surprised if all this was the accumulation, sideways motion, call it what you like, until the news happened. It's an H1 chart, so it's pretty tricky to use intraday, as it were. It takes a long time for the trends to happen. So if we do this again here, let's move this one here, that's the highest high up here. There is the last support in that up move, support making the new high, and when we trend through it again, low, high, high, low, high, high, finally support comes and tests it. And that's sort of, and what we would also find in here would be a 3-candle reversal to the downside, and that would be the same thing. So if we look on H4, let's put a vertical on there. This is just to sort of a reminder of how trends work, reversals work, and so on. There's the 3-candle reversal. Notice it's where our last support level was, almost to the pip, the red candle low there, then the ultimate candle, then the reversal down, pullback, continuation. So, you know, we can look at it on the H4 as well. Let's have a look at when this trend reversed at this point here. That's the last level of support in this uptrend, this massive uptrend. So we move our level up to there, and when price finally trends through it, we've bounced up because it's an H4, it's a big old move, finally come down, and it's used it as old support acting as new resistance. And that's basically what we're looking for all the time. So if we move that over to where our last resistance level was, then we can then move up the time frame, and we will most likely find a 3-candle reversal. That's the low. Notice how that's our low, high, high, low, high, high. You know, these aren't being cherry picked, guys. This is what happened. That's the confirmation to the downside, broke through and closed through there. That's the pullback to test support as resistance here, and then there's the continuation. This happens all the time, guys, and now you can clearly see high, low, lower high, lower low. There's swing 4. That's the accumulation and distribution phase. That is our powerful move after they've faked everyone out. So we could do this in the opposite direction. On this time frame, that would be the high. So let's see if we pop to the weekly, we get a similar 3-candle reversal scenario. That weekly there, high, low, low, high, low. It looks like, sorry, I must stay up now for some reason. Yep, red one's the low. That's the ultimate, that's the ultimate, that's the reversal, which is what I said. you know, you couldn't make this stuff up. This is reverse engineering the stuff I'm telling you about. So it is there again. That's the move down I talked about. That's 3 candle reversal high as well. And there's a continuation. I don't know why my mouse is saying something's going on weird here. So let's go down on a 15 minute and see if we can do a similar thing. Find a that's the last low there that created that new low. So when price trends up through that low, high, high, low, high, high, finally it breaks it, uses it as support, or that area anyway, and then price, as you can see, you could call that the impulse move after the sideways level 4 move. So if we now have a look at the higher time frame, H1 we need for this, just double check the date, it's the 5th of November, so we know where we are. There, 5th of November, that's right. And we have the penultimate high is that one, the penultimate. So we're slightly off on this one, and which is why I use those the candles as opposed to, and now that looks much cleaner for the reversal. So go back to that. There it is there. So you know, when you want to know, this is why I use the candles as opposed to the swings for the levels, because look, we've got a much better level for that break and pullback and continuation. So hopefully that makes sense for you guys. We'll do one more random again. We'll even change the chart if you like. Zoom out. So there's a high there, or a pullback continuation. So that's the final support there. And let's put the vertical in there, leave it highlighted so we don't lose it. 31st of October. So now we can go to the H1, and as you can see, low, oh no, there's that ultimate high, so we're just a little bit off target, which is why, again, as I said to you, I like the candles as opposed to the swings. So that's our penultimate, that's our ultimate, and as you can see, we've closed below it there. Pull back, continuation, back to the 15-minute chart. High, low, lower high, lower low, pull back, continuation. So you know guys, this is how you can do your swings. That's the lowest swing there, so that's the support level that forced the price through that low there. Final support, as you can see, low, high, high, low, high, high, pull back, continuation. So on the lower time frame, looking for the H1 reversal level, and lo and behold, it's a combination of these candles here. Bit messy. That's the ultimate low. We couldn't use the inside bar, we have to join those two together, and as you can see, in fact, all of these were a similar level. And there's the reversal, the confirmation level, there's the pullback, there's the continuation. So the whole point of this is, guys, is to show you how we use the final high, the last support that created that high is what we want to trend through in order to consider our trend reversal in place. It's everywhere. Look, you know, this high creates that low, that gets trended through, low, high, high, low, high, high. That level there is used as support, and price continues. Okay, you know, you can do this sort of stuff all over the charts, and it just, you know, just do your homework. Look for the lowest low, look for the high that created that low, and then look to see how when price moves through that high, your trend will reverse. Okay, Sorry that it's gone on a bit longer than I intended it to, but hopefully there is some useful information there.